Greetings, fellow crypto fans. It's time for another episode of Weekly Crypto News brought to you by the CoinFlip Order Desk. Are you feeling energized? I hope so, because after this week's stories, you might be. The energy discussion around Bitcoin mining, it's a contentious subject in and of itself. On the one side, you've got critics who say that mining Bitcoin requires a lot of energy and has a significant carbon footprint. And they're not wrong, but on the other side, you have advocates who say legacy businesses also consume a lot of energy for increasingly remote audiences. By the way, how are those return to office plans going? See what I'm saying? When we talk about energy, we have to establish a benchmark for the energy consumption. Up until now, there's been one accepted report as the industry standard. That comes from the Cambridge Center for Alternative Finance. This benchmark index looks at the price of Bitcoin, looks at the energy consumption, and looks where in the world hash rate is being contributed to the Bitcoin network. A new methodology put forth in a study by Coinmetrics takes a very different approach. This is where we put on our crypto CSI hats. That previously existing benchmark study looked at a lot of factors. Where in the world Bitcoin is being mined, how much energy is being used, etc. But the new methodology from Coinmetrics goes one layer deeper. It looks at individual machines that are contributing hash rate to the Bitcoin network, coming up with a fingerprint for each of these machines. And what do they find? Newer machines that are mining Bitcoin are much more energy efficient. By looking at the energy signature of individual machines, we come up with a much more accurate picture of energy use across the entire network. As much as 16% lower than the previously accepted benchmark that was put forth by Cambridge. As more new machines come online to mine Bitcoin, the entire network should continue to grow more energy efficient. Let's pull up the chart. So, what happened on June 14th to Bitcoin prices? Well, the monthly Fed meeting happened. And Jay Powell said something to the effect of, we're sending those interest rate hikes on a little summer vacation this month, but don't expect them to pause for the rest of 2023. So markets are reacting accordingly. This strong indication that future rate hikes would continue coming from the Fed was enough to depress Bitcoin prices. Also factor in those recent lawsuits by the SEC, and right now you've got some mixed market sentiment. However, Bitcoin has been scooped up around the margins, and it now represents a whopping 46% of the total market cap for all of crypto. Woo! That's a lot. Make sure you subscribe so you get alerts whenever we drop a new video. You can also follow us on social media so you never miss any news from the CoinFlip Order Desk. Be well, friends.